Hi there, this is Robin Hart of the Home Loans with Hart team of CMG, and this is our weekly market watch video where we share with you some crazy insights on what's happening in the mortgage industry, where rate trends are at, and how politics and international news might impact those mortgage rates. So let's dive in. We always kick it off with the rates. Home buyers and realtors and builders even are still kind of in a bit of shock and awe since February because we were on a lovely rate trend towards 5%. Then the Iranian war happened, which is now, as of today, not called a war. It's actually called a blockade. And that's kind of interesting in and of itself, but it's still ongoing. So rates continue to hang high or tick up slightly. And where are rates at, you might ask? Well, this is as of Friday, May 1st. Basically, the 30-year fixed is clinging, and this is a 7-day average from over 200 lenders across the United States. 30-year fix came in at 6.45%, whereas the 15-year fix is clinging to right around 6%. The 30-year FHA and VA, they're desperately clinging and hoping not to get back into the sixes, so they're clinging just below 6%. All right. Now, again, May 1st, Friday, we're at day 62 of the Iranian war, which is no longer a war, it's just a blockade and negotiation. So let's kind of cover this because it impacts so much of what we're seeing, both at the gas pump and with mortgage rates, and kind of explain and break some stuff down for you. So we're down to day 62 of the Iranian war, which is not just a war, just it's now a blockade, Straight of Hormuz to avoid the congressional oversight issue. But since war started, our world economy has missed approximately about 1.2 billion barrels of oil that would typically be distributed worldwide markets. Now, this blockage is kind of structuring problems, especially in the Far East, which are kind of impacting the price of oil. And even though we generate our own oil here in the United States, if oil companies here can sell oil to other countries for a higher price point, it will. So if other countries, say in the Far East, say Japan, China, they can't get oil, which normally came from the Strait of Hormuz, they'll pay for it in whatever fashion and amount they want, which, the expression high tides raise all boats. Far East having some trouble with their oil supplies because of the Strait of Hormuz, our prices will go up because our oil sellers will sell unilaterally to anyone willing to buy at the highest price point. So this blockage is structuring some problems here that you're going to see at the gas pump, simply because oil sellers can sell at a higher price point at this point. So we may have some predictions on how long this war will last, but we also want to prepare you guys for what's happening ahead. So at day 90, we're currently at 62. So right now we're predicting kind of at the end of May, China, Japan, and India, and even Australia will start to intervene. Why, you might ask? Well, it's not just about oil, it's about food and food security for these countries. You see, many countries from Europe, the Far East, Africa, Australia, basically they all depend on the fertilizer that flows out from the Middle East through the Strait of Hormuz. So it's about 30% of the world's fertilizer supplies. So then they're currently kind of at a standstill, threatening the lives and health and wellness of about a third of the world population. So as you can see from the screen, you can see that Sudan, Sri Lanka, Australia, United Republic of Tanzania, Somalia, Pakistan, Thailand, Kenya, New Zealand, Mozambique, even Japan, and even China and India, they all depend upon the fertilizers coming out. Now, what happens to the production of food? If you no longer have fertilizer, well, food actually drops tremendously, so precipitously, and turns into about a 30% less production of food supplies around the world. So this could cause our food supplies over the next 90 days to increase drastically. Other predictions that we have, if this blockade slash war slash inconvenience, whatever you want to call it, between Iran, Israel, and the United States goes on even further for another 60 days, so we're saying at the end of June, I do believe the tech bros will start to intervene. And here's an interesting point. Why, you might ask? Well, 30% of the world's helium comes from the Middle East through that Strait of Hormuz. Now, this means fewer chips great AI and space race and technology race all are challenged. Now, to my great surprise, I didn't realize, but pretty much just about every modern technology from cell phones, data centers, chip manufacturers, your computer, to even flat screen TVs, guess what? They all depend on helium. I just thought it was there for blowing up balloons on a happy birthday, but turns out our cheap flat screen TVs might say goodbye-bye with the lack of helium coming out of the Strait of Hormuz. So I do think tech pros will get involved, but they will be the last ones to start getting involved. That's right around the end of June. Now, here's the crazy part. So we have some predictions on how long this will last. So we got at day 90, we have multiple countries stepping in and intervening to try and get something produced. The war will, let's see what else. So we'll have the war lasting through August, and I think there will be a multi-front negotiations with multiple nations and even technology industries. It will be September before goods flow freely through the Strait of Hormuz. That's because it takes time to reopen, and there's going to have to be some trust built for the ships because the ships are multi-million dollar. Think of it like a whole train going through. They don't want to lose their teams. They don't want to lose their money. They don't want to lose their goods, and it can't be insured right now. So it'll take a while for these ships to be able to resume those passageways and resume them in such a way as they become calm and dependent. The price of a barrel of oil, I believe by the end of May, we're going to see $150 a barrel. And by the end of June and July, I think it might even breach $200 a barrel, which means $5 gas pumps here in the United States. Mortgage rates, I kind of see because of the upward pressure on inflation. I still see mortgage rates cap out at about 7.25, which is where they previously kind of capped out at. Now, food prices, we are going to see a skyrocket of worldwide. New resurgence of state players kind of seeking food and water as security internally. So we're going to see a lot more countries try and go food independent of any kind of world order, if you will. And also, we're going to see a worldwide resurgence of green energy, but it's not going to be American-led. It's going to be China-led because they are the current leaders of those industries. A more challenging environment for technology. We are going to see that because there is going to be some ongoing fights about the components and the natural materials that are actually needed and the goods and services that are needed to build up these technologies. And when will oil prices go down? Well, they'll plummet probably in about 2 years after everything gets settled, but it'll take a while. It will take a good long while. So, all right. Now that we're off of prognostication, let's get back to two full moons. The two full moons are Friday, May 1st and Sunday, May 31st. Now, what actually comes up unique is that the month is so long and the actual flower moon starts on the 1st. The blue moon happens on the end of the month. So we're opening and ending with full moons. It's kind of a beautiful thing. Very unique, actually. All right, so let's make it happen and have a little bit more fun. So today in history, this is Friday, May 1st. Check this out. On this day in history, 219 years ago today, the Slave Trade Act of 1807 entered into force in Great Britain, abolishing the British participation in the transatlantic slave trade and pressed other nations, actually, nation states, to abolish their own slave trades. Now, this was huge because sometimes in history, the abandonment of a previous widespread practice occurs naturally after its practice diminishes. But the Slave Trade Act was passed at a time when slavery was still incredibly lucrative business and demonstrating, at least partially, that the resolve of abolitionists in Britain who lobbied and campaigned for 18 years to get a bill. Why do I think that's important? Well, there's a lot of things that we all want to fix within our country. And you know what? Back then, 18 years was a really long time. Times pass slowly, incredibly slowly. So it is a bit that we are able to still change the trajectory of a nation, whether it's United Kingdom, whether it's eventually the United States following, definitely years later. But guess what? We did eventually follow. So keep up the good fight is basically what I'm saying. So, and this week's meme, considering home equity loan without consulting your loan officer, well, it seems like a little bit dangerous. You might be Indiana Jones running in front of the Rolling Rock. So now here's kind of an interesting pact. All right, so when is the best time to buy? Well, I'm asked this often, and mostly I would say it depends on you. However, I want you aware as a consumer, and I want your consumers aware that if we have these inflationary pressures like ongoing oil issues and oil prices going up and food prices going up, these are inflationary. Inflation is the enemy of mortgage rates, which means the home you buy today will be cheaper than the home you try to buy in the next 3 to 6 months. And it probably will be cheaper than the home you buy in a year. Now, that's not because even if people stop buying homes and just sit on them for the market, that doesn't mean that they're anticipating that their value or their equity will go away. As a matter of fact, more than likely, current homeowners are a tendency to kind of pull back and say, no, I'm clinging to my equity. I'm going to stick to my guns. And quite honestly, I'll just rent out the house if that becomes an issue. So please be aware that there is a timeline here of before inflation really starts to hit and impact us, we need to act as home buyers and advise our clients as such, that there can be some security in knowing if you buy today, you won't pay tomorrow's prices. So if you like this video, please follow us on any of our social media outlets. We're on LinkedIn, Facebook, YouTube, and the artist formerly known as Twitter. I'm Robin Hart with the Home Loans with Hart team of CMG, where we're here to help you build wealth and your clients build wealth each and every day through the financing of homes and commercial loans. So hope you have a great week. We'll catch up with you soon. Bye.